Today's show is brought to you by our sponsors at Betterment Advisor Solutions. If you happen to be thinking, there's got to be a better way to grow my RIA, you're not alone. With Betterment Advisor Solutions, we do the heavy lifting so you can focus on what matters most, your clients. From improved service that makes asset transition smoother to fast, paper-free onboarding that delights clients on day one, we've built a digital-first platform designed to streamline your operations and make life easier. Now, if you're thinking, wow, they take the paper out of paperwork, then you'd be right. Grow your RIA your way with Betterment Advisor Solutions. Learn more at betterment.com/advisors. Investing involves risk. Performance not guaranteed.
Feel the energy.
Feel the rhythm.
Yes. All right. Stablecoins. What is it? There's crypto in it. My name is Downtown Josh Brown. I'm here with my co-host, Michael Batnick. Welcome to an all-new edition of Live from the Compound. You got that right. We're going to talk about stablecoins, and we have one of the foremost authorities on the topic. Sam Broner is a partner on the investing team at A16Z Crypto. Prior to joining A16Z, Sam was a software engineer at Microsoft on the founding team of the Fluid Framework and Microsoft Copilot Pages. Sam also attended MIT's Sloan School of Management, where he worked on Project Hamilton, also starred in the school's play, Hamilton. And you were at the Federal Reserve Bank for a minute. You were consulting on some stuff for them, right?
That is true.
Okay.
I worked at Project Hamilton.
All right, very cool. Hey, we're thrilled to have you. Stable coins historically had been a boring topic until Circle came public. And now I'm watching video of you all morning. I see you making the rounds. Everybody wants to know, why is Wall Street so excited about investing in companies that provide either stablecoins themselves or the payments infrastructure that's going to be incorporating stablecoins? Like what is this like meteoric rise of the stablecoin as a hot investment theme? Tell us what's happening.
I think if you're on Wall Street, then you've done payments stuff before. You sent money to someone to make an investment and you know it kind of sucks. And so when someone says, hey, look, I've got a substantially better product, I've got better money here, people get excited, and that makes sense. Like we've sort of unlocked that with stablecoins. But I've been doing stablecoin stuff for 18 months, 3 years. Like it's been hot for a while. We're just getting regulatory clarity right now, and the technology keeps improving. And so Wall Street's waking up to it.
All right, I want to just start with a definition for people who watch the show and they invest in stocks and bonds, traditional assets. Maybe they've traded Bitcoin. They might have some like awareness, like, all right, I get it. It's a dollar, it's a crypto thing, and it's a way to hold on to value without being currently exposed to risk. I think people understand that. Stable coins as a segment of payments is now gigantic, and there's a lot of money just parked in stable coins or actively using stable coins. Give people like an idea of when we say stable coins, just generally, what is it about and what do they need to know?
Yeah. Stablecoins is money stored on the blockchain, but it's backed by things that we all understand. It's backed by the most liquid asset in the world. It's backed by a treasury, a 90-day or less treasury or other cash or cash equivalents. And so when I say I've got a treasury, what I'm saying is I've got a thing, it's worth $1. It's sort of like the money that's in your Venmo account or in your deposit account or in a money market fund. But I can use it in all these fun new ways. I can send it to you almost instantly and almost for free. I can send almost any denomination for less than a cent. That's unbelievable. And it's backed by treasuries. It's backed by things that you know and trust that are easy to verify. And so we've got sort of the safest, best version of stablecoins now. It's these fiat reserve stablecoins that are backed by treasuries. That's what's really popping off. That's what's 90% of the market. That's what Circle does. That's what you're hearing about in the news.
So that's USDC. That's Okay.
Yeah, USDC, USDT, Tether. These are fiat reserve stablecoins, money where you've got to claim, get a little bit wonkish here. Yeah, and I'll do this throughout the day if you permit me. You've got to claim on $1 worth of treasuries or other cash equivalents. That's what a stablecoin is.
Tell people that are not in the crypto environment in any way why would somebody need this?
Yeah, I mean, well, let me just give, instead of why they'd need it, let's talk about like what is how excited everyone is. This past spring, so the last 3 months, Visa, MasterCard, Stripe, MoneyGram, JP Morgan, and many other big names that all your listeners are going to know, they all announced that they're going to have stablecoin initiatives. And that's because stablecoins are an easier, better way to send money. I can send any amount. So from 10 cents to $10 million over stablecoin rails nearly instantly and nearly for free. If you try to do that today, you might think, oh, that should be easy. I'd do it with my bank. For a lot of people in a lot of circumstances, it's a very annoying, very
why aren't
process.
So why isn't 100% of all the whole payment system already onboarded? Like, what's the negative, or what's the potential negative or drawback that's stopping people? Was it just the regulatory clarity all along?
No, I think that would be like unfair. I could say that, but it's really like 18 months ago, we had a technology improvement that took stablecoin payments from being, a dollar or two to send money and maybe 12 seconds. About 18 months ago, it became less than a penny in less than a second. And so it got a lot faster 18 months ago. People started building some of the integrative technology to make it easier to use, bring it into fintech applications and so forth. And then over the last 6 months, we've had this really exciting regulatory improvement. So these three waves, it's the technology, then it's the integration, then it's the regs, and that's what makes it light up right now.
Got it.
Sam, I was reading some of your work, and there was a crazy stat that you shared. Like, you'll tell me the number. Some million, it's 30 million people are exposed to currencies with a lot of inflation. What was the number?
For currencies, a lot of inflation, it's way higher than
it's
that.
Like 300 million?
Hundreds of millions. Yeah,
whatever it is.
Yeah.
So that part is lost on people in this country. Like,
Yeah.
I have Venmo. What's wrong with, who cares? And the argument, so that resonates. Listen, if I'm in Argentina, I don't want that shit. I want the good shit. I want the USDC. I want the USD. Right now, it's hard to believe this week, the House announces it's crypto week. And there's obviously a lot of talk, a lot of legislation. So if the biggest beneficiaries of this stablecoin are people that can't access our dollars, why is it so critically important that we lead the charge? Because that's what the crypto people say. We need to innovate in America. Why?
Yeah, I mean, we get stablecoin adoption. That means way more dollar penetration. Dollar is already, by the way, the best form factor for money in the world. It's what everyone wants to hold. There's a reason why, if you're in a high inflation country, you want dollars. There's this huge structural demand for dollars in Argentina and Egypt and Turkey and so forth. I think the number was like 750 million people live in high inflation economies. They all want dollars, and we want to be able to provide those and make them accessible. It's another way for it sucks up U.S. short-dated debt, one of the most liquid assets in the world. That's what's backing these things. And it's sort of a way of projecting soft power.
Can we pause on that?
Yeah.
Sucks up U.S. debt. So if $1 trillion comes into U.S. denominated stablecoin market, that's $1 trillion potentially of buying power for T-bills.
Yeah,
so
right now, stablecoins are the 14th, 18th biggest country by treasury purchasing. They hold that much in treasuries. And if we 10x stablecoins, which I think is a real possibility, that we'll see 10x the amount of stablecoins out there, it's going to be a major player, especially in short-dated treasury ownership.
Based on your conversations, do you think Scott Bessent understands that dynamic or thinks it's meaningful?
We've got a whole policy team that's more in touch with him, but I think people do understand that this does change a little bit how the treasury markets are going to work. Like stablecoin issuers are becoming major buyers there.
So this drives, but let's just say, so these citizens that live in high inflation countries, these are behind economically, technologically. This idea that they're going to have access to some tech to get stablecoins sounds great in theory, but why don't we just fix global hunger? Like, there's plenty of resources to do that. And maybe it's a dumb analogy, but other countries are just going to let this happen. Like, what happens if there's all this selling of their currencies, their treasuries, or their whatever federal instruments to back ours? Does the peso just go away? Like, what happens to their currency in this environment?
You guys are well read, by the way. Like, I appreciate that we're getting right to the meat of it. I love talking about this stuff. Like, so I wrote this paper.
Well, do you think we skipped over something important before we get to that, or?
Well, we've got time on this podcast.
Okay, yeah, plenty of time.
So I wrote this piece last month, how stablecoins become money, and part of the question posed there is, what happens to non-U.S. currencies? How, are countries just going to say, all right, fine, we're getting dollarized? I think that there's a lot of ways this could go. It's part of why I like investing in stablecoin infrastructure and stablecoin projects, because it's not obvious. It's not like I'm investing in SaaS where we sort of know what's going to hit and what isn't. There's a lot of directions this field going. My guess is that we're going to see countries begin to build local currency stablecoins. They're going to continue to demand their tax payments are in their local currency. They don't want to give up control of the ability to change their own interest rate to respond to supply and demand shocks in their local economy. But they actually do want the efficiencies for their small and medium businesses that are doing import-export. Like, let them denominate transactions in dollars and integrate with the global economy more effectively. And so if you're like a textile manufacturer in Nigeria, well, wouldn't it be great if you could just accept dollars natively instead of having to go through this kind of convoluted banking infrastructure that's slowing down your ability to focus on your core competencies?
I think I saw
this.
Actually,
that could work.
Yeah, I think I saw this in your materials, and maybe we have this chart. But the example that you use is a garment manufacturer where they're doing the final assembly of the garment in Mexico, but they are buying textiles from Vietnam.
Yeah.
So this is a B2B payment, very typical in the modern economy. Walk us through how this works and why this needs to be replaced or should be replaced.
Yeah. So right now, this process is a Mexican garment manufacturer wants to talk to a Vietnamese textile manufacturer, and they have an ongoing relationship, but it's mediated through a Mexican local bank, a larger Mexico-based correspondent bank, maybe an HSBC or some other large bank, another correspondent bank, and then a local bank in Vietnam. That can take 3 to 7 days. And we talked to a lot of people who are running through this like financial rail. Often they have no idea where their money is. And they can't even get an estimate of how much it's going to cost in advance before they send a payment to their like collaborator. Now we talked
the cost of moving the money or the cost of currency fluctuation.
It's both, although FX is the one that's more frequently not estimated because it's like a 7-day window.
Yeah,
but also, if you have an extra correspondent bank in the mix, they won't say what the fee is in advance. Imagine that. I'm trying to send $1,000. It's like, what's it going to cost? You just got to deal with it. You're beholden. And so we talked to some of these guys who are doing not exactly this business, but similar. And they can get on the phone with their friend, their business partner who lives in Vietnam and say, did you get the transaction? And it'll be over in 1 second. They get USDC 1 second later and it costs 1 cent. So the person on the other side can deal with, I actually want to store the money in dollars. I want to turn it into baht. I want to turn it into dong, whatever they're going to do. And it's sort of, but the transaction happens instantly and it's way less confusing, way less bureaucratic.
You never go full dong.
But I want to give people the context of how big what we're talking about potentially could be, because we're not talking about $1,000. You note that in 2023, the global payments industry handled 3.4 trillion transactions, accounting for a mind-boggling $1.8 quadrillion in value, generating 2.4 trillion in revenue. And let's put this table up just to give people an idea of the transaction fees involved in the various ways that we move money today. So the example Sam has is a credit card payment is 2 to 3% plus 30 cents. So that's like just like a standard fee that let's say Visa or MasterCard is imposing.
Josh, go to remittance. Look at that fee.
Yeah, remittance 6 point, and these are people getting remittances often are the people who can least afford to give up 6.65% to move $200 is out of control. And that's Western Union, effectively.
Yeah, I'm a bit of a bleeding heart here. Like, this is offensive. I mean, this is someone who's like sending $200 home to mom, and they're spending sometimes $13, $20 on that. Okay. That's a meaningful amount of money. It's crazy.
All right, ACH transfer could be from 20 cents to $1.50.
But it's the time. It's the time.
Yeah. Let me do one more. Peer-to-peer payment app. So Venmoing somebody, it's free if you're peer-to-peer, but businesses that accept Venmo are going to take 1 to 3%. Do I have that right?
Yeah, you do.
Okay, or Square or whatever. Okay,
yeah.
So it's a ton of money, a lot of transactions, a lot of delay, a lot of people in the intermediaries sitting in the middle. Why is it this way to begin with? because you need a trusted third party in the middle with the technology that we had, because some Visa has to say, yes, Michael is paying Sam Broner's bakery for a dozen donuts, and Michael is a credit that Sam doesn't have to be comfortable with. Visa will take that risk.
Fraud, chargebacks, all that shit.
Okay, so now in this scenario, stable coins as a payment mechanism, there's no need for trust because it's a blockchain and everyone sees the transaction and validates it.
And it's instant, by the way. So like when you go to a coffee shop and you go to a bodega, that's a New York City coffee shop in every corner, and you give them $2 for a coffee, they take the money and give you the coffee. There's no like fraud risk there. You gave them the money, you got the coffee. With stablecoins, because you can actually do the transaction in less than a second, you can have that same feel. Where actually there's a lot of situations where you don't need the fraud risk prevention because the transaction is a
devil's advocate. All right, so devil's advocate. The garment manufacturer in Mexico does a stablecoin transaction with the company making the fabric in Vietnam. The fabric arrives damaged, the wrong color, lesser quality than what was expected. Well, tough shit. It's on the fucking blockchain. The transaction happened. Live with it. Is that the answer from the crypto native people to that, or is there some other mechanism?
Yeah.
I want you to answer.
I will. Well, two things. One is in that transaction you just described, the Mexican garment manufacturer, they don't have a credit card. It's not a credit situation where they're going to go to mom and say, can you handle this fraudulent situation for me? They've got to, duke it out, and maybe they have an insurance product. But let's talk about the credit card situation for a U.S. consumer, where really the fraud prevention is a useful feature that we all like. Yeah. First of all, I don't think that's the first place crypto gets adopted.
What?
I don't know what card you have
in credit cards
to replace credit for us. I mean, you have an Amex? You have a Chase Sapphire Reserve? What
Platinum.
Yeah. Okay. Platinum. Good. The fancy card. You get basically a 2.5% discount on everything you buy. And that's a good deal for you. I'm not like that's not a deal that stablecoins are gonna beat tomorrow. But for the users that don't get the benefits of the credit card you're using, this like very powerful credit card, because everyone wants your business and they're willing to subsidize it. Stablecoins do offer a better product. The merchants prefer it because they don't have to pay the fees. The users like it because there's better applications that support it. It's easier to program against stablecoins. And you can layer in fraud prevention, fraud protection, and insurance products that begin to imitate some of the features that you get from your Amex,
right?
But unbundled and more appropriate for every interaction.
Sam, you mentioned it's good for the merchants. Obviously, it's great for the users. I don't know if the financial services industry extracts 1 to 2% of GDP a year, whatever it is. It's some ungodly number.
Unbelievable.
But this is big business. It's big business for the banks. It's big business for Visa and MasterCard. And I understand that they are getting in the game, but the market caps of these companies are at all-time highs. And Wall Street does not seem to be worried that their margins are going to be under assault. Should they be?
I think that stablecoins induce competition, and we all want take rates to go down on payments. Like, we don't want a global tax on every transaction. We want to be able to do business together. We want to be able to make payments, buy stuff more cheaply. When fees go down, the total payment volume goes up. There's more things that you can buy that cost less. I think we're going to see more transacting, and so the TAM is going to go up.
Oh, it's like
take
free
rates
trading.
go down. Free trade, yeah. Free trade and globalism. We see take rates go down, total volume go up, and I think ultimately the high tide raises all ships, even if on every transaction you make a little less.
Let's put this chart up. Visa, MasterCard. These are not the charts of two stocks that anyone expects to be disrupted anytime soon. Visa
these guys
is
have made
$700 billion in market cap, MasterCard $500 billion. And what I want to ask you about here, they seem to want to put out a lot of press releases about what they're going to do with stable coins. So maybe they find a way to like add on value added stuff that like they say to themselves, okay, we're hip to it, the new rails, blah, blah, blah. And we have an idea about how we stay relevant in a world that's moving towards stable coins. So I guess from an investing perspective, because we're like a Wall Street show,
Yeah.
do you think the risks to them cannibalizing their own business just to be involved in stablecoin is like worth discussing, or like how do you think about that?
They're savvy. They have people working on this. This is the class. I'm an investor. I do mostly startup investing.
Yeah.
I think the startups are going to win. I mean, that's sort of who I root for by nature. I like seeing the little
This is
guy.
This is the innovator's dilemma. Like, so
this is the innovator's dilemma. This is the S curve, and this is we'll see what ends up happening. But they're going to have to work really hard to make sure they don't get beat by more crypto native, stablecoin native, early startups that are moving fast and trying to make better products.
So Sam, you mentioned you're an investor. We saw one stablecoin issuer go public, Circle, the biggest legitimate one in the United States anyway.
Yeah.
Is that, and the stock is on fire, is that
Yeah.
a reflection of the future of stablecoins? Is that a reflection of the current environment where there is just not enough supply of investable assets and investors want access to this? Like, and are there more stablecoin companies that are going to be publicly traded at some point in time?
Well, I think that every fintech is going to become a stablecoin company because it's an easier, better way to build fintech products.
So this is PayPal, Square, like
if you're, I mean, look, those guys already made substantial investments in capital expenditure and making sure their product works today. But if you're a new fintech, getting started on legacy banking rails, you got to go one by one to 190 countries to get your product out there. It's a convoluted regulatory and engineering process where you're working against software from the 1970s. It's nonsense. If you use a stablecoin backend, if you use stablecoins to build your fintech app, you can be global on day one. You can have a product out in a week. You can do stuff that you can really hardly imagine using traditional banking rails because it's just too complicated and not worth it. And so, I mean, the question is like, what is there to invest in the public markets? But the answer is that, like, I think a lot of the fintech opportunities are going to be stablecoin opportunities.
So let's take like an example. Let's say, and I'm sure this has been pitched to you 5,000 times already.
Yeah.
Somebody comes along and says, I'm willing to bet that there are enough people comfortable moving money in crypto that I can build the Venmo for crypto that like goes mainstream, and we could get a few million people with a dedicated app, and all we do is enable people to send whatever it is, if it's Bitcoin, if it's ETH, but send value peer to peer, and not try to build Coinbase, but just like try to build this like very specific. How many times have you heard that pitch? And like, how far away do you think we are from something like that crossing over and becoming a thing that regular people use?
Well, we see it. I've seen it a ton of times. I mean, maybe the real answer might be like 40.
Okay.
But that's because it's a great idea.
It is a great idea.
The place we see it work the most is in a pretty narrow remittance scenario. So someone will say, I've got a great edge going to market in Colombia. I'm going to own the US to Colombia corridor. And I think I might have met with 20 companies that were growing 10 to 30% a month doing this kind of remittance app. And I mean, that's crazy for me to see 20, 30, I mean, just a lot of companies growing at 10% a month. Unbelievable. This never happens. And, but there is this question about like the Venmo product. The Venmo in country has actually been solved. How much better are you going to get than free instant payments? But the international scenario,
I have no problem with it unless a lot of my money is sitting in stablecoin already, and I just want to not change it to dollars. I just want to do that. But you're saying that's not that big of a problem.
Well, look, I think the pure payments thing is basically solved in country, but out of country for remittances, it hasn't been solved. But then when you want to do like a super app, finance super app, I would prefer to be able to get a yield on my money. I'd prefer to be able to invest it, send it, save it, do a bunch of other verbs besides just send. And crypto, stablecoins in particular, make that a lot easier as well. So suddenly it's not just a payments app, it's an app where I'm tracking more of my financial life.
All right, so I'm sorry. Let's follow up on that before we move on. So at the current moment, my understanding of the Genius Act is that they wanted to separate stablecoin activity from banking in such a way that stablecoins cannot, in and of themselves, have a yield attached the way that a checking account or a savings account or a CD can. Do you see that evolving then? And we get into a situation where people hold stable coins, earn a yield while they're waiting to transfer value.
Yeah. This is one of my hot takes. And so if we ever go out for a beer, I'll give you my full list of hot takes. But I actually don't think earning a yield with stablecoins is such a huge deal the way it's typically described. And that's because most consumers they're doing two different things. You spend or send money and then you save money separately. And so it's actually totally okay if I don't earn a yield on my payment stablecoins. And then once I'm done doing payments, I can either stake that money to earn a yield using DeFi, or I can turn it into a different asset that does actually earn a yield. But you want to be able to do that really quickly. Today, I store my money in some deposit account at a mainstream bank, at Bank of America, Wells Fargo or something, and I'm earning like 0.5%. I mean, it's crazy given what treasury rates are. And it's kind of annoying to sweep that money into a money market fund where I could be earning 4.5%, 5%. But stablecoins are going to increase the amount of competition in fintech apps and they're going to make it much easier to build interesting products. And so I can be spending money and not earning interest, but then 10 seconds later, I'm staking and I'm earning interest. You mind if I tell like a brief story about this? Yeah. Cool. So I was playing basketball the day. I rent this gym in Chelsea, and at the end of the game, people send me $20 because I paid for the gym. And this guy had heard that I like stablecoins. He sends me $20 in USDC. I get it. It cost a fraction of a cent. I immediately stake it on this service called Aave. And it's a Saturday game. By Tuesday, I'd made back in interest the money that had been spent to send the money in the first place. And now I'm earning interest on this. You can't really do that action in traditional financial apps where I'm sent money and immediately earning yield on it. And it's because the composability of stablecoins makes it much easier to do.
So now we have the political wherewithal to allow this to happen. You have better technology and you have lower take rates. It seems like a very ripe potion. What sort of time frame are we looking at realistically before this is a thing? And are we even going to know it's a thing, or is it going to be sort of part of JP Morgan's offering and Visa's offering, and it's not going to be like this whole new stablecoin world?
Yeah. I think of in different countries, it'll happen differently, and we're going to see this adoption develop depending on the application and the use case. So in countries with high inflation, they're holding stablecoins directly, and they know that they're doing this. They want that dollar product. For international money sending, remittances, B2B, so forth, they know stablecoins are sort of involved, but they're using a new application that gives them a better price and a faster, better experience. And so it's kind of on their mind. In the US, I think it's going to be more silent, where we all have the
It doesn't matter. It's a stablecoin. It just matters that they're moving the money.
And the next great fintech you hear about is going to be powered by stablecoins, and it's going to allow them to offer you a really great product that just like wasn't possible, and you didn't know why it wasn't possible. But now you've got a fintech app it's 3 times better at sending money internationally. It's 2 times better in terms of the UI. It's a little bit better at giving you a better interest rate. And so forth. So you'll just use a fintech app and you're like, this thing rocks. I wonder how.
Do you have a sense of how many people are sending international remittances, either from the United States or just globally? Like what's the TAM of something like a really cheap stablecoin remittance?
As I mentioned, we met with a bunch of companies this winter and spring, and all of them are growing 10% a month. So whatever the number I'm going to give you, I think it's going to be 10 to 20% higher next month, just based on the early stage startups that we're talking about.
So this is like an Uber driver in Miami whose family is in Venezuela, and every week, whatever he takes home from Uber, he wants to move a portion of that from however they pay him. He wants a way to send that value back to his family in Venezuela and not get raked over the coals for 7% by a traditional remittance. That savings, that's 7% of, I don't know how much he's sending home, $1,500, $2,000. That's a
often
big,
it's
that's a big deal.
Often it's $100 or $200.
Wow.
And the less money you send, the worse rate you get. But actually, with stablecoins, it's often a flat fee, and it's a very low flat fee. And so that also makes a big difference because now you can do more smaller transactions rather than trying to scrape together to 300 to save $5, which actually matters to your mom in Venezuela. Like, people are distorting the market right now because of the expense of these remittances.
So earlier we showed charts of Visa and MasterCard and said, do these look like companies that are worried about being disrupted by stablecoins? What we should have shown was Western Union. The stock is down 50% in the last 3 years, and it's at a 52-week low. And this is certainly evidence of, there's something there.
They might have no business.
Well, look, Visa and MasterCard, Visa and MasterCard actually do have something really impressive, which is their merchant network. They work with millions of businesses all over the world. They help build that terminal, that everyone knows. You swipe, tap, whatever, scan to pay, and they've helped bootstrap this trust network where you can go. I was just in Italy over the last 2 weeks, and I tapped to pay.
Not to brag, Sam.
Oh,
wait,
word?
where were you?
I was in Positano on the Amalfi Coast.
Oh, I did that 2 years ago. I loved it.
It was
awesome.
amazing.
Awesome.
Yeah. Well, they accept my credit card there, and that's because Visa helped bootstrap this trust network. And
did you stay at El San Pietro?
No, I did not, but
Okay.
I saw it. It looks really
Did
nice.
you have a drink there? It's pretty
I did not.
impressive. Okay.
Okay,
Go on.
Yeah. Yeah. Well, anyway, I mean, look, I could spend my money there partially because of
Visa.
Visa's work, and but that same trust network could probably be re-leveraged to actually support stablecoins.
So actually, this is actually no Amex in Europe. You can use it, but you shouldn't because they're charging you an international fee. I've never used my Visa so much. I only use Amex here, and I only use Visa when I'm overseas. Now, if there's this third thing, I could tap my phone, and it's connected to an app that allows me to pay a stable coin but like MasterCard and Visa, I guess, have to agree that they want to introduce that into the merchant network that you're talking about.
Yeah, that part is really interesting. And again, I'm an engineer, so I kind of geek out on this stuff. You could repurpose that payment terminal to just accept stablecoins natively, and there's some fraud steps that go away with a stablecoin transaction because the money is sent instantly. There's no way to undo it. So if I'm buying a drink and I see the bartenders making it, I'm happy to send them $1, and the bartender's happy to accept the $1, and we don't actually need to have quite the same trust network that we have with Visa and MasterCard, which are operating on credit and therefore need to have the guarantees they can actually trust me, and that'll be good for my money.
Are you surprised at the valuation that Wall Street has given Circle? I think it effectively 10x'd from its IPO price, not the opening price, but like the price it was offered at. Mike, did it do a full 10x?
I mean, I don't know if it 10x, but let's see. It certainly went bonkers. That's a technical term. So it came out at like, I think they priced it at 40, came out at 70. Is that something about?
I thought it was 31 for some reason. I have in my head.
It ran to 300. You might be right.
Are you surprised, Sam? What do you think? Buy, sell, or hold.
Yeah, right. These guys know I'm an RIA, so I'm like, there's not so much I can say on the matter.
All right, fine. Yeah. But let's put it this way: the underwriters, had they had any idea about the true demand for this stock, would not have priced it where they priced it, because by accident, I assume, they left a ton of money on the table. So Wall Street was definitely surprised by the fervor to get in on a crypto infrastructure play. It's effectively what it is. They're not bullish on stablecoins. They're bullish on the usage of stablecoins, I guess would be the way to phrase it. So like, what do you say from Silicon Valley? Like, what were you like? Holy shit! They really want the Circle stock. What's going on?
Well, for me, it's obvious. I spent all day talking to early stage companies, and they're all saying,
you're not surprised.
What I'm not surprised about is that Wall Street's a little bit late to pick up on a new, better way to move money, and that people who are really using this stuff get it and know that this is the future, and they want access, a way to invest in that. But the key thing is that people just have recognized that stablecoins are likely going to be a big part of how payments work going forward. And Circle's one of the biggest brands out there.
Of course, you guys know more about it than we do.
Yeah.
So you guys are funding it. The best analogy that I give people for Silicon Valley, and I know you're in New York, versus Wall Street, like you guys are the elves, we're the orcs. But the orcs really wanted in on this particular stock, and now this morning I saw Grayscale just filed for a confidential IPO, a confidential filing for an IPO, and it looks like we're going to get a whole host of crypto infrastructure plays to come to the New York Stock Exchange and the NASDAQ. So like this is a really hot theme now, even for the non-crypto native.
Even for the non-crypto native. But again, I'll just go back to the fintechs. I think a lot of regular fintechs and regular payment companies, they're going to be using stablecoin rails and stablecoins as the basis for their new products because it just is a better way to build what they're already building, what they want to build, what consumers want. And so I don't want to spend too much time building a delineation between a stablecoin company and not a stablecoin company when I think a lot of the financial companies out there are going to be using better infrastructure, not because of any speculative. I don't care about that. I what I want to see is better products that make payments cheaper and faster. And that's happening.
Star Wars guy?
Oh yeah, a little bit.
Okay. So it occurred to me, this sounds like it could turn into a galactic credit standard. So whenever there's an exchange of value in the Star Wars universe, they talk about credits, and they don't talk about like what country the currency is from. They're not talking specifically about any one planet's monetary system. These are just the galactic credits, and how many credits is it? How will you pay me to take the Millennium Falcon on your suicide mission? Like that's right. If we do increase the penetration of the dollar by means of getting everybody comfortable with stable coins, we could end up in a 1, 2, or 3 currency, a 3 or 4 currency world versus a 10 currency world.
I don't think we're going to end up in a 3 currency world.
Okay.
I do think as a consumer, we don't always realize just how much of the world is already priced in dollars. I mean, that's what B2B payments are priced in. It's the global unit of account to some extent, and maybe that'll grow. I think that dollar penetration will grow, and I think there's this huge structural demand for dollars. Consumers everywhere, especially in high inflation countries, want to be saving in dollars. Businesses want to hold money in dollars because they're buying goods in dollars because that's the unit of account. Dollar penetration will continue to grow, but I don't think we'll have a hegemonic currency just because the value of controlling your own currency is pretty high. Like if let's say there's some sort of supply shock in a local industry, maybe you're export a lot of wood and there's a big forest fire. Well, you might need to induce more credit to help businesses bridge that production gap. And if you're all on the dollar, it can be harder for countries to be responsive to their own local needs. And so there's a lot of reasons to have a local currency, but also there's a lot of reasons to have people have access to the dollar so they can participate on the global stage more readily as well.
Does the stablecoin ecosystem rely on people's enthusiasm for Bitcoin continuing? I know I know these are not speculative per se.
Yeah.
But like the continued use of this does rely on people remaining interested in the whole crypto ecosystem, or is that not anything worth worrying about at this point?
Speculation has, of course, been a big part of crypto's history. That's not why and that's actually not why A16Z is excited about crypto. We think it's a better way for people.
No, that's why Michael's excited about crypto.
Yeah, that's why Michael's nodding over here. No, it's the reason why we like it is because crypto offers a better way for people to trustlessly collaborate, and it's a better technology stack for building financial products. And so that reason is why we see all these fintechs getting into stablecoins. And so I think the two issues are fairly unrelated.
Michael, do you have anything else? I have one more for Sam.
I'm finished with this guy. No, I'm good.
So for the crypto skeptics who watch our show, and we have both, but for the people that are just uneasy about, spinning up an entire new financial architecture for the world, with up until 3 weeks ago, no regulations, what do you think is the biggest risk, systemic risk, not risk to any one player or coin, but what is the biggest systemic risk that could arise from the mass adoption of stablecoins as kind of like a foundational financial services system? What do you worry about, or what do people worry about?
What I want to see is I want to see tight integration with existing financial institutions, because there's a lot of implicit knowledge there. There's a lot of knowledge that's been built up over years of how to manage risk, how to do like distribution, how to educate customers, how to get merchants and suppliers to coordinate effectively. And I'd like to see stablecoins have access to the people who know those systems really well, so that stablecoins aren't just sort of a new rail. They're a rail that can really move forward the existing important industries that are out there. And so a risk would be that traditional payments companies don't adopt stablecoins fast enough, and we end up with people reinventing the wheel in a way that's slow and just doesn't benefit the consumer as much as I think stablecoins should and will.
So you don't think there's a risk to the banking system, let's say, or to a risk to the credit card system that could potentially be introduced if something goes awry? You think the bigger risk is just that we move too slowly?
I think there's going to be a lot of competition. I think if I was a incumbent in payments or in banking, I'd be worried I'm not moving fast enough, and I might get my lunch eaten by a savvier startup. But no, I don't. I'm not very worried about, I think, the existential risk that you're getting at. I'm worried that that stablecoins and traditional finance aren't going to collaborate enough to get best of both worlds.
Sam Broner, this has been super helpful for Michael and I know for the audience as well. I want to thank you so much for joining us. Let's tell people where they can learn more about the A16Z house view on stablecoins and other crypto topics. Where would they go?
You can follow me on Twitter at Sam Broner, and more importantly, go to a16zcrypto.com or follow us on Twitter.
You're the man. We'll come back to you someday in the future. Let's revisit. I'd love to.
Thank you, guys.
Get
really nice to meet you both.
All right,
Appreciate
awesome. Hey guys, thanks so much for watching. Thanks for listening. Smash that like button, subscribe, tell your friends, etc. And we'll talk to you soon.